Hello. Hello.
Good evening, sir.
Yeah, good evening. Good evening. You able to see the screen?
Yes, sir.
Yes, sir.
You able to screen the screen? Okay, good. So let us start this. Today's is the fourth session. In the fourth session, we will discuss about the foreign trade policy again more in detail, along with the experiments. Is a handbook of procedures. Both will procedure means foreign trade policy along with handbook of procedures. What are the provisions? Previously I told you briefly what are the foreign trade policy, what are the chapters, and each of the chapter what are the content, and briefly I told you. But now each of us will go more in detail. Okay, so that is how this today's session. And tomorrow we will discuss about the documentation. Export import, lot of documentations are there, procedures are there. What are those? Tomorrow we'll discuss, because first we should have a broader and depth of the understanding about the policy procedures, about the foreign trade policy, right? And next we'll go with the documentation. Okay, so this is how it has been designed. A step by step we are going. First briefly we are informing the more of the details, means in brief we are going for, then step by step we are going for the details, right? So as I told you first day itself, these are the 6 steps for starting of any of the business. And there the first step about these things we have discussed, what are the basic requirement to form a organization, we have informed to you. Then about we told about the DGFT and other formalities and other things we are told. DGFT is a means it is a means found through a Foreign Trade Development and Regulation Act 1992, under which this Directorate of Directorate General of Foreign Trade was formed, and it has 35 regional offices. Generally, we call RA regional A offices, and more than like 2,400 employees are there. And this main function of the DGFT, Director General of Foreign Trade, is for the formulation of the foreign trade policy, and it's related to import and export related various controls. And also this organization is for the promotion of the exports and also controlling of the both exports and imports. Okay, mainly it is a promotion of the foreign trade from mostly exports from India. Okay, and also various other regulatory aspects also it is in under purview. And also it is mainly looking after for the any grievances are there, export and import related any grievances are there, quality related any aspects are there, disputes are there, then also there's a special cell is there in the DGFT which looks into it. Okay, then there publishes foreign trade policy. The policy is for 5 years tenure. The foreign trade policy is for 5 years tenure. Okay, present foreign trade policy is 2015-20, but 20 is over. The 20th March 31st it is expired, but later of course it is an extended each time 6 months like they extended, so 5 times they extended. Now this is valid till 30th September 2022. Okay, when 2022 it is a valid up to September 30th. Okay, the 2020 2015-20 policy only extended. Okay, and also they are publishing along with policy is a broad framework outlook, and also it gives our the means what are the policy related aspects of the various schemes, and corresponding to it there must be some procedures how to make the application, what are the details of the application or formats, and where to apply, when to apply, what is other obligations, like the all details are given in the procedures. So whenever we are talking about the foreign trade policy, along with that we have to link with this policy. In GST for example, we are talking of the act and corresponding to its rules. Rules are procedures, act is about the policy. So similarly here we are talking about the foreign trade policy is broad about the policy, the rules are the procedures are handbook of procedures. Okay, handbook of procedures, again there's a 2 volumes. One is about the procedures, appendices, and ayad, niyad, niryad forms. That forms and other things are contained in first volume. And the second volume, it talks about this standard input output norms. Like yesterday also I told you, whenever you are going for the any of the advanced authorization, we have to refer to the SIAN norms, means standard input output norms. Based on that only they will issue the authentication of the license. Okay. Then they also publish about ITC HS classification. Yesterday also I shown briefly, and I shown also some of the items how to find the ITC, right? Chapter wise there are there. So it is aligned with HS codes. HS is harmonized system nomenclature, HSN. This is controlled by the WCO, World Customs Organization, and all the signatory countries, almost like 200 plus, they follow uniformly these HSN practices, these commodity classifications. Okay, and it is uniform up to 6-digit level. And India also adopted, but countries are individual countries are given certain additional options to add additional digits for more of the detailing of the classification. So India is adopted up to 8-digit classification, and US is up to 10-digit classification. Like that, many different countries have different classification, but minimum there must be 6-digit classification, which is uniform across the world. Okay, so India also adopted with 8-digit. So according to that, they made Indian trade classification ITC HS along with the aligned with the HS. They have publishes. That is what the DGFT publishes every time, right? And up to time, it is been updated. Okay, so this is how the about the DGFT brief about. Then, as I told you yesterday, these are the 9 chapters are there. First chapter about the legal framework and trade facilitations. Some of them important aspects we'll discuss out of this chapter. Then the second chapter talks about the general provisions regarding import and exports, and some of the main features we'll discuss. Then these are the mostly the third chapter is about the incentives. Then the fourth chapter is about the duty exemption, or means advance authorization we are talking about, or remission means duty drawback. So these things are covered in the fourth chapter. And fifth chapter about the EPCG scheme, that is an export promotion capital goods scheme. And 6 is EOU, then 7th deemed exports, then 7A is transport and marketing assistance. These also I show you what are the assistance provisions are there, what are the rates of this is certain incentive for the logistic disadvantage, like then quality related complaint, there is a separate cell is there, then is definition. So these are the 9 chapters are there, and each of the chapter wise some of the important features will go, and mainly we'll discuss about the various schemes which are there for export promotion. These are the export promotion schemes from the chapter 3 to this chapter 7 and 7A, right? Up to these things are about the various export promotion schemes. So these schemes also we'll discuss more in detail, right? Chapter 1 we are talking about legal framework and trade facilitation. Legal framework and trade facilitation, basically the policy is talks about how to minimize more of the documentation related, and how to facilitate for the so that promotion of the exports. So that is what the focus, that is an objective. With this objective, the procedure they formed, this is about the procedure they formed, that is an objective, and this is the procedure. One of the major aspect they introduced is of the digitalization. So they want to digitalize all the transactions, all the applications, and issue of the author licenses, and all these things, interactions with various with the trade one side and various other authorities. Also they have to interact through digitally interact, not like the hard copies and the like earlier practices, sending the hard copies and other things are no more required. Now everything is digitalized. So that is the major steps they're taken through this policy, that use of digital signature first they started. So all the applications whenever you are making, means that trade, the importer or an exporter, he or she has to take the first the digital signature. Through the digital signature, that is what the link means, they're starting with authenticity. These are more and more related to authenticity of the who has the making the interaction, because a lot of the documents and a lot of authentic data and other thing being submitted, though there must be some authentication, so that digital signature is a mandatory now requirement for any of the transaction if you are making through then means DGFT, right? So they have authenticated some of the agencies. These are the agencies. Through these agencies, we can get the this digital signature. They recommended this is class 2 digital signature is required. There are different classes are there: class 1, class 2, class 3. Class 2 is mostly recommended because of this. We can make this a lot of means this EBRCs and all refund related, and this can be the same digital signatures can be used for the GST also. The same digital signature we can use for DGFT as well as for the GST, and also for other transactions, whatever you want, like income tax also, returns you have to want to file through digital signature, you can do it. So the same can be utilized for the entire entity of the organization. Okay, so this is a major step they have introduced for this through policy. Then Niryat Bandhu is hand-holding scheme for the new import and exporters, new entrepreneurs. There are some trainings and there are other aspects were also they made introduced, and how to enter the business, how to start the business, like import and export business and all things. They are also giving some hints and some guidelines, some hand-holding. So this is what they started with. I will show you in DGFT also what are those provisions are there. I will explain to you, right? Then any complaints or anything you want, you can make through this online transactions only. There is no need for hard copies you have to send. Earlier there is hard copy provisions are there. You have to make a complaint or anything submissions that you have to make only with hard copies. But now no more hard copies are required. You can make through everything through digitally, means online only, right? Just a minute. Yeah, just a minute. Yeah. So anything you want to, any questions and nothing, you post in the question box. Okay, just I open that one. Okay. Issue of the EIEC. IEC already we have discussed. That is a import and export code. This is a mandatory requirement for any of the importers or exporters. It is a mandatory requirement. In case of the services, of course, for the goods it is mandatory. For the services, it is not so mandatory, it is optional. But if you want to avail any of the any of the benefits, export benefits, then it is a mandatory, you has to take the IEC. If you don't want any benefits of the export benefits, then of course this is not mandatory for services, but the goods it is 100% mandatory, right? And these applications and other thing you can make. That is what about the foreign trade policy we are talking about. You can submit the applications digitally, means through digital signature only. That is why first you have to take the digital signature. So henceforth, then all the other related documents also you can make the digitally. The first one is IEC code. That application you have to make in digital form, and within 2 working days they will approve it, because it is nothing but it is a PAN number only. The IEC is nothing but PAN number only, but the PAN number you have to submit online, and along with other details, other documents, like yesterday I shown some of them, and you have to submit to DGFT and get the their so that authentic, that IEC number you can get. IEC number is again PAN number, but they will record it as you are an importer and exporter. Okay, DGFT will record. Then EBRCs means any of the bank related realizations you are getting. Suppose you are made an export, you got payments. Then payment, how you will know that you have got the payment? Because you had to submit earlier. The bank used to give the hard copies of the BRC, means bank realization certificate. Hard copy they used to give. Then those hard copies have been submitted to DGFT, as well as certain times if customs also required, we used to submit to the customs. But now it is not no more required any hard copies because everything is digitalized. So we are going to submit the digital certificates only. So that is what the EBRC provisions they made. No need for any hard copies. You can download or you can make online submissions only wherever it is required. Because export obligation fulfillment, the DGFT also wanted a BRC, but earlier hard copies have been submitted, but now you need not submit hard copies. That directly goes into the DGFT. I mean, the bankers they submit. Again, you need not do anything. Bankers, whenever they get the realizations, they will submit in the DGFT website, and that will be linked so that you can easily trace it out your EBRC also. Okay. So the documents also, because they want to go with reducing the requirement of the documents. Earlier, various documents are required for both imports and exports. Like it runs into, like in export, it goes into 7 documents, and this import, it goes into the almost like 10 documents. So now all these things are reduced. Now exports and imports require only 3 documents. One is about the commercial invoice come packing list. They combined it, both invoice and packing list, both they combined. They call it commercial invoice and packing list. Then a bill of lading or airway bill. That is a shipping bill, shipping lines give, or carrier will give. Carrier used to give. Then you have to file the shipping bill with customs or bill of export. So it has to be filed. So only for export, these 3 documents are required. And import also, again, these are 3 documents. Instead of this shipping bill, you want to file the bill of entry. Of course, tomorrow we are going to understand about the documents related. Of course, these are the basic minimum requirements. Additionally, certain other documents also required. Okay. Online filing of the application, as I told you. Now all the DGFT offices are means it is now is online applications only accepting, no manual applications. Everything is now automated, online submissions only. And facility for the documents, updating the documents like CA, CSR, means chartered accountant, or cost accountant, or company secretaries certified documents. Certain times it is required to prove that your exports are done, or some transaction or some data authentically it is done, means their certifications are required. Those certifications also now you have to submit online only. There's no need for hard copies. Okay. So for that also provisions are given. So where it is required, along with that, you have to submit online only. That is what the EDI system, electronic data interchange, that introduced, and it is linking various other departments also, like customs, banks, and EPCs, means export promotion councils, and other relevant authorities. All those things have been linked. Now it is interlinked between various government agencies as well as with a trade. Importer and exporters can interact. So they submit the documents online, and online also they can track. Online they can retrieve the documents. Online they can download the documents also, like the licenses and other thing. Licenses, no need, they will give the hard copies. You need not get the hard copies. You can download from the system itself. Okay, the licenses and other things also. Similarly, whenever the interactions are there, all the interactions with the government agencies and other thing, it happens through online only. Okay, no need for any hard copies. Where there have been interlinked, you see, they're interlinked for the bill of entry, like for the import, for the customs, for example. Similarly, for shipping bills, that is through customs. And online issuance of the export obligation discharge certificate, that I will discuss once I will come to the that various export promotion schemes. You have taken certain schemes, for example, advance authorization. There is an obligation. That obligation has to be fulfilled over a period of time. And how you can prove that you have fulfilled? That is the document, that is the DGFT gives the that EODC. EODC means export obligation discharge certificate. Means once you have fulfilled your obligation, then you have proved it, on submission of the online documents that we have made an export, then you will get the export obligation discharge certificate. DGFT will issue, and that is required to submit to the again to customs online only. Again, everything is goes online. So similarly, interacting with various other agencies and other requirements, it is all mean digitalized. Customs also now operating 24/7. Earlier there is a time limits, only working days and working hours only you had to submit the documents. You can go physically submit the documents, but now no need for any submission of the physical documents. Everything is online. Like I told in the customs provisions also, faceless transactions are introduced. So therefore there is no need for any hard copy submission, and it need not be only time limits. Any day, any time, 24/7 you can upload the documents, and also relevant to the things you can track it and download also wherever required. So everything is become online provisions only. Okay, for shipping bill filing for the exports, as well as for the import bill of entry filings, and related all other documents also made through means 24/7 that customs portal will operate. That is IceGate. Like last time I told you in the second day, IceGate is the that is the portal, customs portal. There you can submit the documents. Okay. Of course, this is an advantage: reduce the cost of doing business, enhance the transparency, reduce the duplicity. Means very many times we are submitting same document to many other agencies and authorities. Those things can be avoided. And also compliance related or authentically you can prove it that yes, we are submitted, we have done. Earlier there is certain hard copies, though you are submitted, you used to get the notices that you are not submitted certain documents from the customs or from the DGFT notices you are used to get. So in this case, when you are made online, everything is authentically, it is proved that you have submitted. Okay. And self-assessment of the customs also they introduced. This is one of the scheme, like I told you also, self-assessment scheme. Whenever we are making import, for example, bill of entry can be filed on self-assessment of the values, self-assessment of the duty and rate of the duty, and duty is also amount of the duty. You can self-assess and you can submit the bill of entry. Similarly, for the export also, you can self-declare, and that declaration can be filed online through IceGate. The RCMC, like registration cum membership certificate, like I told you, we can get from the export promotion councils. These are the specific to the commodity wise. For example, agricultural items, there is an EPIDA. Engineering items, there is an engineering export promotion council. Leather items, leather export promotion council. Electronic items, electronic export promotion council. Software also, software export promotion council. Like the different commodity wise, there is different export promotion councils are there. Those applications now you can make through DGFT. Earlier you had to approach to individual export promotion councils and make the application, but now there is no need. You can go to the DGFT website. From the website itself you can make the application. There is no need for hard copies. You no need to go to any of the EPCs, because in your place that export promotion council may not be available, then you will finding the difficulty. So now no need, you can apply through online through DGFT site. And also they clarified, if you make the one application for any of the export promotion council, that will be valid for other export promotion councils also. No need for, because is that item wise, means these export promotion council commodity wise, but each of the commodity you need not make a different EPC registrations, but only one RCMC is enough now. Through that notification they have clarified it. Then we are talking about authorized economic operators, AEO. AEO, this is as per the WCO guidelines. WCO made some ease of doing business. For that, there are certain provisions they made. Some eligible these exporters and importers are given certain facilities, so they can make the automatic clearances and etc. So that is what the doing business, ease of the doing business, that provisions, the WCO means World Customs Organization. They have made certain provisions. What is the advantages I'm talking about? These are the some advantages. You see, the direct port delivery of the imports. Imports whenever they be happening, for example, I'll tell you, whenever the imports comes to the port has a limited space. They can't store all the containers and all the materials and which are coming for import. There's no space, limited space. Therefore what they do, the moment the import vessel is comes, then the materials have been, that containers have been carried, and through there's a train, that cargo train, that goes, the cargo train goes carrying the containers to another place, that is CFS, container freight station, some distance away from the port, because port has a limited provision for the means keeping the goods. If they are taking these goods to the CFS, when you are clearing from the CFS, additional charges are applicable. CFS again not giving the space free of cost to the any of the trader or importers, and it required let an additional cost you have to incur. So if you are AEO, then there is no need that goes to the CFO. You can directly take that goods from your port itself, so that you are saving lot of time as well as the cost. That is one of the major advantage of the AEO, authorized economic operators. Okay, and there is eligibility is there, eligibility criteria and other things also there. When I come to the this export documentation, then I will tell you what is that eligibility, who are eligible for filing that one, how to file the application and other thing I will tell you. But just now you understand who are what is the AEO. AEO means authorized economic operators, and they those specified that import and export means the trade, they have given certain facilities. One of the good facilities, direct port delivery. The other one is direct port entry. Entry, that is the import is for delivery. The goods are which comes to the port, you can directly take from the port itself to your place. For export, you can deliver these goods not to the CFS or ICD. You can take directly to the port itself, so that you are saving additional cost and time again here for the make the movement of the goods. So that is a direct port entry. Then deferred payment of the duties also. So payments of the duties means whenever you are making the import, you have to make the customs duty paid. Like I told in the second session, customs duties you have to pay. Then only that out of charge has been allowed. Then you can take the goods outside the your port and customs discharge. But the AEOs are given certain facility. They need not pay immediately. They can take the goods, then within that 15 days period they can make the payment of the duties. So that is also a provision, that advantage for them. It's a deferred payment of duties. Then faster dispersal of the drawback related. Today we are discussing export drawback. What is that? Export, whenever you are making, for the taxes and other thing whatever you are incurred, there is a certain provision to get the reimbursement of the remission of the what are the taxes you are incurred, that cost. Okay, and that drawback provision, so that for the AEOs this processing will be very fast. Others may get within 90 days, but these people may get within a month. Like some preference is given for them for getting the dispersal of the means getting the drawback amount. Similarly, refunds also. Whenever like yesterday I talks about GST, when I talked to you, then we have discussed there is a certain refunds are allowed when we are making an export. What are the refunds? Like ITC refund or IGST refund, like yesterday we have discussed. Those refunds also will be processed and refunded faster for AEO, because they are given certain preferences. Okay, then self certification of the certificate of origins also. Certificate of origin, what are those documents and all the tomorrow we are discussing. When I'm coming to the export documentation and import documentation, there I will tell you what is the certificate of origin. But certificate of origin, generally certain agencies are there. means the DGFT is nominated certain agencies like federations or chamber of commerces like that. So from there you have to get the this certificate of origin. But if you have AEO, you can make the self declaration of the certificate of origin. There is no need for going to some other agencies to get that certificate of origin. Like this, there are certain benefits are allotted for the AEOs. Okay, this how that is what continuing these AEOs. Then comes the chapter 2. Chapter 2 is general provisions regarding imports and exports. And before I'm going, I will show you, like yesterday I shown to you that DGFT site. If you go to the DGFT site, this is the DGFT site, and there's a regulatory updates are there. If you go there, there's a foreign trade policy is there. Here you can click it. When you're clicking here, there is a foreign trade policy. You see, this is the foreign trade policy. Also, there is another is the foreign trade procedures, means handbook of procedures are there here, and related forms are there, appendixes are there. Then also here the notifications, public notices, circulars, trade notices, all these things also available up to date. Some of them we'll see, like yesterday I shown to you foreign trade policy. Again today also will go, the foreign trade policy will go. Just a minute, I'll take another also open. Yeah, one is the foreign trade policy will open. Yeah, policy we are going. Chapter wise their policies are there. This is the first chapter we are talking about. You can download it. This all anybody can do, means it is a free of cost, no need for any login and nothing, no provisions are there. These things are free, but only those which are services are there, like where you have to make the applications and etc. Then there is an authentication, digital signature is mandatory. But these things to see, there is no need for any applications and etc. Okay, so here you can download. Okay, sorry, this is a download we are talking about. Yeah, it made this ulta icon. Yeah, so they can download this first one, legal provisions. These are the various legal provisions what we have discussed. All those things are available here in this provision. Okay, all those which are like self-assessment of custom duty and other thing also we have discussed. So all these things are available here in this AEO also provisions I discussed. AEO, authorized economic operators, that advantages and other thing also I told you. And these are about the policy. And once you open the procedures, there will open the procedures. For example, this is about the procedure we call generally handbook of procedures, HB. Here also if you go to the legal provisions, for example here, then they will provide you how to make the applications, all the details, actual procedures, like use of the digital signatures or all other things are more details are given. The procedures are given here in this handbook of procedures, where to apply, whom to apply, when to apply, what is the timelines, what is the format, and who has to sign, and all these things, the details are provided in this here. Okay, here is similarly like these things you see, all the emails or e-trade projects. So all these things are available, procedure part of it, how to make the EBRCs and all thing, and EDI portal, all the procedure part is given. Okay, now going to the second chapter. Now we are going to the foreign trade policy second chapter. Yeah, this is about the second chapter. Second chapter is general provisions regarding import and exports. Here, as I told you yesterday, first any of the means we want to import or export, we have to see whether there is any freely it is allowed to export or import without any license or restrictions, or is there any restrictions are there or provision is there. That is has to be seen. That is a very mandatory first requirement at all. First, any of the import and export related aspects. Okay. So that is being classified based on the ITC, as yesterday I told you, ITC HS classification for import and export. There they defines about the whether it is free or any restrictions are there or provisions are there. All these things they discuss like this. This is free without no need for any permissions. Then restricted, you has to take the license from the DGFT. Prohibited, you can't export or import. And the channelized agencies, these are being allowed only through certain state trading agencies only, enterprises like STC and MMTC. Okay, so these are both for export separately and import separately they mentioned. In export, import, there is a schedule 1. Schedule 1 talks about import and schedule 2 talks about export. Like yesterday I shown to you in this process in the DGFT site itself. So you can go to this here. There you can find the ITC provisions also. Just a minute. Yeah. You see, this is an ITC based import policy, that is schedule 1. And yesterday again I shown to you the schedule 2. This is the for schedule 2. This is for the schedule 2. Okay. So schedule 1 and schedule 2 gives about the each of the commodity wise, each of the item wise, whether you are allowed to import without any restrictions, or any restrictions are there, or provisions are there, or any channelized items are there. Like that, it indicates both for import as well as for export. Okay. So this is how it talks about. Schedule 1 talks about the import and schedule 2 talks about export. These are given in the DGFT website. Okay. So next step is you have to take the Export Promotion Council's registration, that is a RCMC. That Export Promotion Councils, as I told you in the first day, and again I've shown to you many times also, that Export Promotion Councils are commodity wise. There are different Export Promotion Councils. There is 27 Export Promotion Council plus one more, that is a FIVO, and 7 commodity boards are there. These are specific commodity wise, and their purpose is country image, to build up the country's image, and exports support the export services and market through various trade fairs also they are participating. And also there certain time the delegates also they're sending to the overseas. So all these things also they're providing the support to promote the Indian exports. Okay. Then also they're making the sales leads, like buyer and seller that meets also they're organizing. And also they are conducting various types of programs and webinars, seminars and workshops to promote to encourage the exporters to make the exports from India. And also they are also issuing the certificate of origin also. All the export promotion councils are entitled to issue the certificate of origin. Okay. So these are the major advantages of this export promotion councils. These export promotion councils, the list is given in appendix 2T. Based on that list, you can go which are the items related to yours. Accordingly, you can go. For example, I'll show you in this website. I'll show you. Sorry. If you go here, the export promotion councils adjustment, the appendix. In appendixes, if you go, the 2T just is getting opened. So it is in a 2T. If you go to the 2T, that appendix, various appendices are there. Then you have to go to the 2T. This is the 2T list of export promotion council, commodity boards and export development authorities. This is where you can download it. If you download it, you can see for example, ready-made garments. This is an authority. Apparel Export Promotion Council is an authority. They have these are the regional offices and head office and all these things are there. So you can find these details also, including contact details like their email and phone numbers and other fax numbers also you can get it. Okay. So similarly, for other items, for example, like the dyes and dye intermediate, these are the chemicals, for example, basic chemicals and pharmaceutical and cosmetic goods. This is an Export Promotion Council. So these are the items which are, if you are exporting, then this is the EPC, means Export Promotion Council. Their addresses are given like that. Each of the item wise, you can find out what is your item. From this column, you can find out what is your item, and for that item, who are the Export Promotion Council, you can find it, and where the address and other thing also you can find from this appendix. Clear, sir? Any doubt? Anything you want, you can immediately raise your hand, or you can ask him immediately so that we can clarify. Okay. Yes, sir. Anybody any question? Okay, let us move forward. So these are the various export promotion councils, as I told you, and these are the commodity boards. These are different commodity boards. All the details you can find from this appendix 2T. Here I shown to you appendix 2T. So Export Promotion Council for the MSME also sector they introduced. Each of the export means MSME, director of DI, director of industries, DI. Each state there has a MSME DI, and in the MSME DI they have put some separate cell for the export. So you can even approach them so that they can guide you for the export promotions and export items, and export related any of the doubts and other thing you want, they can give the assistance. Okay. So these things we have discussed, prohibited and other thing. Digital signature and other thing also discussed. Now we are going to the third chapter. Second chapter is over. Now coming to the third chapter. In the third chapter, originally there are mentioned in the 2015-20 policy. There are policies that these are the two schemes are there, MEIS and SEIS scheme. MEIS means Merchandise Export from India scheme. SEIS means Service Export from India scheme. But these two schemes are now not available. The new scheme is introduced effective from 1st January 2021. Up to, from that time, this new scheme started. There's a wrought up scrapping the previous schemes. These two schemes are now not available. Okay. Briefly to tell about this is for the goods. MEIS scheme was that was there earlier. This is for the means goods export, and they are used to give the script. The script value is 2 to 5% of the FOB value. They are used to give a script. That script you can utilize for the payment of the duties. I mean that script is given. For example, you are exported say 10,000 rupees. For example, FOB value of the export is 10,000 rupees. 2% of the 10,000 you are entitled for one item. For example, there are 2 to 5%, but say it is 2%. 2% means how much it will happen? 10,000 means 20 means 2,000 yeah, 2,000 rupees. Sorry, 10,000 no. I mean it is 200 rupees. 200 rupees you can get the script. That script you can utilize for the payment of the duties, or you can, if you don't want, you can sell in the market also. So it is transferable. These are freely transferable scripts. Similarly, for export of services also they used to give the SEIS scheme. Okay, but these schemes are now not available. In this the place they introduced the ROTEP. Now they introduced the ROTEP scheme. Why they introduced this? At present, what are the export promotion schemes are there, like MEIS and SCIS and advance authorization and EPCG scheme. All these schemes are in US. They have challenged in the WTO. US has challenged, United States has challenged these schemes, saying that these are the subsidized schemes. So subsidies are not allowed as per the WTO norms. So we have contested. They made a complaint in 14th March 2018, and we have contested, but we lost the case. When we lost the case in 2019, they already notified to India that we lost. Then there is a provision to appeal, and India made an appeal, but appeal also lost. When the appeal also lost, then we had to withdraw the schemes. For withdrawal, they are given certain provision of say 2 months or 2 years. Within 2 years period, we had to withdraw like that. Now the new scheme, that is why when it comes that new foreign trade policy, the MEIS and SES already removed, and other schemes also like EPCG scheme also they remove it, because that is not compatible with WTO norms. And also some other schemes they want to modify, because the EOU scheme also not incompatible fully with WTO, and SC means SCZ scheme also some of the provisions are not compatible with WTO, so they want to withdraw those things or modify those provisions. Okay. So why they introduced the ROTEP scheme means that remission of duties and taxes for export scheme. That ROTEP scheme they made provision, because in the entire supply chain of the exports, if you see certain places, certain items are many places we are getting taxes we are paying, but those are not being refunded or not made remissions. We are incurring those taxes as a cost. So now the government want to introduce that scheme, such whatever we are incurring certain taxes, duties and various places levies, those they want to refund to us, which are there as per the WTO norms. So this scheme is WTO compatible. The ROTEP is WTO compatible scheme, so we can avail of the scheme benefits. So therefore they introduce this scheme. Okay, already rates are been published, ROTEP rates. The rates also I'll show you. For example, LWTO, this one. Yeah. Again, if you go to this regulatory and other thing, there you see ROTEP. So ROTEP, you can click here, and you're getting the ROTEP. These are the rates are available in Appendix 4R. In the Appendix 4R, the rates are applicable. So you can click here, you can get the rates what is there for the items. Different items have different rates, and also maximum cap is also given. Means if you are exporting an item on FOB value, certain percentage of the FOB value they are giving this ROTEP benefit. And of course there is a certain maximum cap. You can't exceed that amount more than that cap. That cap per unit, like they're mentioned, per kg or per ton or per packet, like that. So those things we can see like this. Okay. Like this you can see that the different schemes have different, yeah, different items have different rates. Some are 2%, some are 2.5%, some are 0.5%, like that. Different rates are there, like this you see, like this. So what is your corresponding item, you can select it. These again aligned with the harmonized system, but that is what the HSN code wise, that this is aligned with HSN code. These are at 8-digit level they mentioned, AC 8-digit level they mentioned. So you can get these benefits as per that items with maximum cap. Okay. So that is what they introduced in the chapter 3. Earlier schemes of MEIS and SEIS they removed, and they now made this scheme. The scheme, like various stages, we are incurring certain duties, like in state level as well as central level. These are the various taxes and levies and duties we are incurring, but there is no other provision before the ROTOP scheme. There is no provision to get these refunds or get these remissions. These are taken as a cost only, but through ROTOP scheme they are now introduced, they're giving you certain compensation for this loss of your cost towards the taxes and duties. Okay, which is again the beauty of it is a WTO compatible. Okay, now we are going to the chapter 4. Okay, chapter 4, as I told you, this is about the duty exemption and remission scheme. Duty exemption remission scheme, there the objective of the scheme is to allow the means for the export products you require certain inputs, certain raw materials, some packing materials, some consumables, some input services. So all these things you can import duty free, so that your export product will be more competitive without incurring a tax disadvantage. So you can be competitive, you can produce, then export the finished goods to overseas. So that is the purpose of this scheme, this system, right? So here there are broadly duty exemption scheme and duty remission scheme. Duty exemption means the duties are been exempted, import duties are been exempted when you are taking this license. Then there is a duty remission scheme, means first you have to make the payment, you have to incur the cost of the taxes, duties, whatever may be. Then you can get this means drawback, duty drawback they call it. Whenever you're exporting, you can opt for the duty drawback option. Then you can get the duty drawback, that is DBK it has been called. That is a remission scheme, means you have to incur the cost, then you get the refund of the means remission of the taxes and duties whatever you are incurred on import of the goods. Okay, so under the exemption scheme, there again two schemes are there. One is the advance authorization, that is the AA, generally it has been called AA. Of course, under this various other like annual requirement and special advance authorization, like that schemes also there, but broadly it is an advance authorization scheme. Then duty free import authorization scheme, these are two schemes are there. Import this duty free import authorization, this is now government is discouraging because it is not WTO compatible, and it attracts a lot of disputes also, because of the means it is a transferable license. So whenever the transferability is there, there are certain related disputes also happening. So the government want to now discourage this scheme. Already certain restrictions have been imposed. Mostly we'll discuss about advance authorization scheme, and drawback scheme at the end of the today's session. We'll discuss this one, the drawback scheme. Okay, that because the drawback scheme is controlled by the administered by the revenue department, mean customs department, but this duty exemption scheme is administered by the DGFT. That is what we are talking about, DGFT related advance authorization we are going to discuss. As I told you, there are two provisions are there in advance this duty exemption scheme. One is advance authorization, another DFIA. Here the advance authorization in this scheme, you are allowed to import duty free your inputs like raw materials, consumables, packing materials, or even fuels, and all these things you are allowed to make the import without payment of the duty. But these are being based on the SIAN norms. SIAN means standard input output norms. SIAN means standard input output norms. Based on these norms, you can import the relevant what is allowed. Like yesterday I shown to you, again I will show you any of the item for exportable item. Correspondingly, there are SIAN norms. SIAN norms means standard input output norms, means what are all inputs are being allowed to import, what are the quantity, that is also been mentioned. I'll show you some example. When you go to this A, here you see SION standard input output norms. You can click here, then chapter wise that list will come. This is chapter wise, you see chapter wise their big list is there, and any of the chapter you can download, and then you can see, for example, electronic products, for example, I'm downloading. When you're downloading, this is the coming example showing. Just a minute. Yeah, this is what we are downloaded. And of course this runs into several hundreds of pages, so it is not possible in Excel and other thing to make. Always it is available in the system. Anytime any of the item you want, you can refer there and you can download accordingly. Okay, just is getting downloaded. Yeah, like this is made. For example, one of the item we are taking, aluminum electrolytic capacitors. This is the export item. For example, this item you want to export, say you want to export say 1,000 items. On 1,000 items, these are the inputs are allowed. What is allowed? Cathode foil, and this is the dimensions and other thing. What is how much quantity also they mentioned here. These are the various dimensions of the cathode foil are allowed to import without payment of the duty. Similarly, anode foil, cathode foil and anode foil. Then tissue paper, then electrolyte, then lead tab, aluminum can, and rubber bunks or disc cover, then headset like this. These are all items. These 10 items are mentioned here. These 10 items you are allowed to import, and this is the quantity of each of the item. Each item there is a quantity also they mentioned. Up to this quantity only you can allow to import. Okay, this is one item, like example I told. This is an export item. Okay, similarly various other items also, like the audio magnetic head, for example. That next one I am showing. Yeah. Okay, here also these are the some of the other items are allowed. You see, if you are making this audio magnetic head of say 100 items you are exporting, then you are entitled to import these are the items, and this quantity is also mentioned here. Like that you can refer anytime of any of your item. So this is one of the advantage to promote your export product, because domestically if you are procuring on payment of the taxes and other thing, it will be more costly, so that you will not be competitive. So globally wherever it is available cheaper, you can now import duty free, and then make the processing, make the manufacturing further, and then you can export the product. Okay, so then you will be more competitive. That is the purpose of the duty exemption scheme. Okay, under the duty, this the duty advance authorization, under the scheme, it is allowed for manufacturers. Suppose you are a merchant exporter, means you are a trading exporter. In such case, you have to mention the supporting manufacturer, then only it is allowed. Otherwise this scheme is basically for manufacturers only. Manufacturers can import inputs, then use the inputs for manufacturing of the exportable product, then export. That is the purpose. So it is basically for the manufacturers. In case you are a trader or you are a merchant exporter, then you have to mention the supporting manufacturer, then only it is allowed the license, otherwise no. So under these policy provisions, these are there, right? Then this is for the physical exports, including suppose you are sending to the SCZ, then also it is counted towards your export obligation, because you have to take certain export obligation. After the importing, you have to make the export. Okay, so for the export, suppose you are supplying to SCZ, that is also treated as an export, so your obligation will be fulfilled. Also you can send to the intermediate supplies, And the supply of the goods as a deemed exports also means suppose somebody else wanted your products, you are not sending outside the country like export, but somebody else holding the advance authorization or any of the EPCG scheme, or they are the EOU unit, then these are been called as the deemed exports. So for the deemed exports also you can supply, and that export obligation can be fulfilled. Okay, so this is how the you can fulfill your export obligation. Means whenever you are importing those items, you have to fulfill the export obligation. Like example I'm showing here. Just now we have gone through here now. Sorry, where we have gone. Okay, these electronic products we went now. Again, I will open. Acha, already opened. Sorry. It is open here. Suppose you are making the export of the aluminum electrolytic capacitors. Your obligation say 1,000 items if you export. These are the imports you have entered. Suppose you are imported, these are always in advance authorization happens. First you have to import. Based on that imports that materials you can manufacture, then export. Okay, that is what generally happens. That is what we call it in advance. In advance you are importing the items. Okay, in advance, then using those inputs, making the production, then exporting. That is the purpose. So whenever you are importing, these are the items, for example, under the advance authorization, that is in advance authorization, then you have an obligation to export this item. This item you have to export this much of quantity. So that is what the obligation again with quantity as well as value. That is obligation is linked. Okay, so that is what the obligation had to send, either direct exports or exports to SEZ or supplies to SEZ or any of the deemed export also you can now make and make the fulfillment of the export obligation. Okay. Then this validity for import is 12 months. Within the 12 months from the issue of the license, this is a license only, we call authorization, advanced authorization, but this is a license. So once it is issued the license, within 12 months you are entitled to import those allowed as per the CION norms. You can import. Okay, and then for the export, of course the value addition you have to make, then you have to export on the value added, because always certain value addition is norms are fixed. Okay, so that what is the value addition, how you can calculate, this is the calculation, value addition calculation. A minus B by B into 100. A means FOB value of export and B means CF value of the import, means import of the inputs. Okay, this is CF value. Total all the different items are there, all the total import is the BF, means CF value of the import is B, and A minus B divided by B into 100 is the value addition. In general, they mentioned the 15% is the minimum value addition you have to create. Means minimum value addition after the import. Suppose you are making the 100 import, then 115 export must be there. Means 15% value addition must be there. In some certain cases, that value addition also the specifies that may be higher value addition. In certain cases, for example, tea and other things, in case of tea, for example, the value addition is 50%. And in jewelry and other thing also the value addition is more than 15%. Like different items have different type of value addition. Okay, so with this value addition we have to export within 18 months. The export has to be done within 18 months. This is what 18 months. Import is valid for import for 12 months, means within 12 months from the issue of the advance authorization you can import the items which are allowed as per the CION norm, and after the creation of the value, means through production, then you can export with minimum 15% of the value addition within a period of 18 months. That is what the obligation you have to take, 18 months obligation, right? So in a shortcut, again I am talking about for import entitled as per the CION norm, you are allowed to import duty free, and validity for the import is 12 months. Then after the value addition, you can make the export obligation, that is through value addition this much, this is the value addition, and minimum is 15%. but some cases they specify sometime more than 15%, certain time less than, but in general it is 15% minimum value addition. You have to fulfill that obligation within 18 months. So this is like a summary. You can understand this through summary. This is an obligation for the export. Okay, this is all about the advance authorization. Okay. Any doubt? Any doubt?
No, sir.
Okay, okay, okay. Now we'll go. So whenever you're importing, then what are the duties are been exempted, that is been shown here. What are the exempted duties? That basic custom duty and IGST, and if any anti-dumping duty also there, that is been exempted. Safeguard duty also exempted, and any other safeguard or any of the duties are there, those are all been exempted. Okay, so it is total duty free. You can import the inputs as per the CON norm, then you have to export based on the export obligation within period of say 18 months. This 12 months is an obligation, means your validity for import. These are the exempted: basic custom duty, IGST, anti-dumping duty, safeguard duty, and other duties which anything are there. Specifically, if anything mentioned, those duties also been exempted. Means total it is an exemption, right? These what are the imports you are made, those are subject to actual user condition. Means actual user condition means those who are been given the license, only that entity, that company, organization only can import and use in their own. They can't sell it, they can't transfer to any other company or any other means outside the organization. Okay, so they has to make within their own organization only. That is what the actual user condition. Domestic sourcing also allowed. Instead of import, you don't want to import, then you can allow, you can take from the domestic sourcing, means domestically you can procure. In such case, that is been called the deemed exports. Deemed exports also separately I will talk to you. The domestic supplier, that input supplier, he will supply you to the, you are the advance authorization holder, you are procuring from the domestic suppliers, then you have to pay the GST and you can claim the refund of the GST whatever you have paid, so that your item become duty free again, that tax free. Okay, so that is what the scheme, this is called the deemed export. Okay, then once you are imported, once you have taken an obligation and imported the goods under the license, you have an obligation to fulfill, and that obligation you have to submit to the DGFT. When you are making the export, all the proof of export you have to submit to the DGFT in the form. This is the form ENF 4F. In this form online you have to submit the export obligation discharge certificate to get. Once you submitted under this form, then the DGFT, after the verification and other thing, they will issue the export obligation discharge certificate under the license. Then you have no further obligation. That is what the meaning of it, and this is very essential. Otherwise the customs authority will issue a notice, because customs, we are imported the goods without payment of the duty, but that is subject to certain condition. The condition is you have to export within 18 months, and that to make it proof, there must be EODC, means export obligation discharge certificate must be there. So therefore you have to submit this EODC to the customs to get the discharge of the your obligation. Okay. Hello, now let us go for the chapter 5. Chapter 5 is about the export promotion capital goods, EPCG scheme, right? And in the EPC scheme, as I told you briefly last time, for manufacture of exportable items, you require certain machines to manufacture, okay, to manufacture exportable items. So machines also under this scheme, you are allowed to import machines or equipments or any spare parts and other thing also you are allowed to import without payment of the customs duty. Okay. So therefore, under this scheme, this is again to promote the export. With the latest technology, you can import the goods, the machines, and you can manufacture high quality products, then export these items. That is the purpose of this this EPCG scheme. The EPC scheme allows import of capital goods. Capital goods means machines, equipments, and etc. Except those specified in the, of course, negative list also there. Except those things, other things are allowed for pre-production, production, and post-production at zero customs duty. Means you need not pay customs duty, that zero duty, right? The capital goods imported under the EPCG authorization for physical exports are also exempted from IGST and competences, if any. So these have also been means exempted. Then capital goods for the purpose of the EPCG schemes shall include like capital goods defined in the chapter 9, including means completely knocked down condition or semi knocked down condition. You can import the capital goods. That machine certain times entire machine in assembled form, it may not be able to transport. So therefore, certain times what they do, they dismantle it and keep that separate the boxes. Then they can export. They can means we can bring here to the our factory. In the factory, we can assemble. So those are called completely knocked down or semi knocked down. Okay, in condition. Then computer systems also allowed, including the software, and spare parts, molds, dies, jigs, fixtures, tools, and refractories is also allowed. And catalyst for the initial charging of the or any of the subsequent charges also been allowed. So these are the items are allowed under this scheme. Objectives I told you already. Then import, this is the import is 24 months is the obligation, means that validity is 24 months. And you have two options again. You can import or you can take from the domestic supply also. Domestic supply also you can take. Then the domestic supply is called as a deemed exports. So you have to firstly pay the GST and claim the refund. So both way, the purpose is to allow you without payment of the taxes. So that is what the purpose of this one EPC scheme. Both the options are there. Either of the options you can adopt. Okay. And then the condition for export obligation. One is the actual user condition. Actual user condition means the import of the that machine or capital goods or any of the items you are imported under the EPC scheme. Those are not allowed to make any sale or means to disperse outside your organization. It is actual user condition, means within your organization only it has to be used. The actual user condition is attached to this condition for the EPCG scheme. And the obligation is 6 times the duty saved. For example, you are imported a machine, you have saved, say 10 lakhs you have saved, then the export obligation must be 6 times the 10 lakhs, means 60 lakhs of exports you have to make over a period of 6 years. Okay, clear, sir? Suppose you are imported 1 lakh worth of import, means machinery, where you have saved the duty is 1 lakh. You are imported the capital goods, the duty which you have saved because of the EPCG scheme is say 6 lakhs, as a 10 lakhs, sorry, 10 lakhs. Then that obligation must be 6 times. 6 times means 10 lakhs is the duty you have saved. That obligation becomes to 60 lakhs. 60 lakhs of the worth of exports you have to make over a period of 6 years. So that is the purpose of this year. So this is a very flexible scheme because the obligation period also expanded to 6 years period. and you are allowed to import various items as I explained to you, capital goods, not only machines and other thing related to its softwares also you can import. You can make the dies, jigs and fixtures and other thing also you can import. Okay. PPC scheme allows import for pre-production, for the production and post-production also. These are the both are allowed. Then what are the duties are being exempted? You see, the customs duty is zero rated. This is zero basic customs duty, right? It is not told as an exempted, but it's called as a zero rate. Okay. Zero rate means again it is an exempted indirect meaning, but exemption is a separate meaning. Therefore, they not mention the word exempted. So they talk to it is zero rated. Okay. Then IGST is exempted under the section 3.7 of the Customs Tariff Act 1975. This has been exempted. Plus compensation cess under the GST again. These also been exempted. These two both are been exempted. Okay. Then what is the capital goods means? Capital goods, as I told you, this is defined in this the capital goods in this is capital goods as defined in the chapter 9, including CKD and SKD, computer software and the software related all other aspects which are required for the running the capital goods, spares, molds, dies, jigs, all these things also, refractories also allowed, and catalysts also been allowed, which are been required for the production. So all these things called as a capital goods. Okay. So all these things are allowed as per the, as I told you, zero duty of the customs, and IGST and compensations are been exempted. And who are been allowed to get this benefit? Manufacturing exporters are been allowed. Manufacturing exporters. Then merchant exporters are also allowed. Suppose they give the supporting manufacturer's name also in the application, then only they have been allowed. Otherwise, basically it is for the manufacturers only. And as I told you, there is no need for any of the physical documents. Everything is online. So online submission you can make, and obligation also when you are making completed, then also you can make the online submission. You get the EODC. EODC means export obligation discharge certificate. This is what the obligation again repeating. Export obligation is 6 times the duties and taxes and cess you have saved over a period of 6 years. So this is the basic obligation. Okay. And you are allowed to import within 24 months, and the obligation is this one, 6 years the obligation. Okay, right? Suppose in case these IGST and compensation says you are paying, you don't want to take the exemption but you want to pay, then you are allowed to take the input tax credit. Otherwise input tax credits are not allowed. Okay, would not be taken the compensation and net duty saved. Of course you are not allowed to take the input tax credits. If you don't want to take in the obligation, then no credit is allowed. Otherwise you can take the credit. Okay. Export to third parties also been allowed. Suppose you have another agent, for example, through him you want to send, you don't have the direct contacts with overseas buyers, but somebody wants to buy from you, and then these items they want to export in their name. That is also allowed through third party. That exports also been allowed, and you are allowed to discharge your obligation, provided that third party when they are exporting, in the shipping bill they has to mention the EPCG license number, also about the your company name. These means manufacturer's name. You are the manufacturer, you are the EPCG license holder. The license holder's name and their license number, EPCG number, has to be mentioned in the shipping bill. Then only it is been allowed. Otherwise, it will not be taken as a consideration as a third party. Okay, third party exports. Intimation of the block-wise fulfillment of the export obligation is a mandatory requirement as per the handbook of procedures, paragraph 4.14, 5.14, sorry, 5.14. Every block wise, there is a various blocks are there. There's 6 years are there. Now, first of these are the these blocks. I will show you. Just a minute. I will show you what are the blocks here. Just a minute. Block wise, you have to fulfill the export obligation. Just I will show you what are the blocks. Yeah. If we see here, the block wise, you see, first block is there's a block of first means first to fourth year is a first block. Then fifth and sixth years is second block. In the first block, you have to obligation of 50%. You have to fulfill your obligation in the first block, 1 to 4 years. Then fifth and sixth year, you have to balance obligation you have to fulfill. So this block wise, the report has to be mentioned to the DGFT about your progress, how much you are exported and fulfilled your obligation. That status has to be reported to the DGFT block wise. The first block is 1 to 4 years is first block, then fifth and sixth years are second block. Okay, and obligations also accordingly they mentioned in the first block 50% obligation you have to fulfill, and the balance in the fifth and sixth block you have to fulfill. Okay, block wise, whenever you are making that expiry of the block within 3 months from the completion of the block, you have to submit the, you have to intimate online intimation to the DGFT. Of course, these conditions, as I told you, one is actual user condition is also there. The EO shall be fulfilled by the through export of the goods which are manufactured by him through using those machines, not be some other item you are exporting. No, it is not allowed. Only those items for which you are imported the capital goods and manufacturing the items through those using the capital goods, those items only they are taken as a discharge of obligation. EO under the scheme shall be over and above the previous any exports are there. For example, over the last 3 years average they take, over and above you have to take, because this is an additional facility they have provided. So over and above the existing average export you are making, that obligation has to take. This is what the basic conditions are there. Then export obligation, shipments under the advance authorization DFIA drawback, even though you are availing any other facilities as export benefits like advance authorization or DFIA or drawback also you are availing, parallelly you can avail the EPCG scheme also. Okay, so if you are availing the EPC scheme, other schemes benefits also you can enjoy, because those are for the raw materials. This is for the capital goods. Okay, so these are the two different schemes, so that this scheme benefits you can avail of. Okay. Exports shall be physical exports. As I told you, this must be physical exports must be obligated. Deemed exports also allowed. Deemed exports means you are supplying to somebody else who are the holder of the advance authorization or the EPCG authorization, or they are the EOUs. So then also this export obligation can be fulfilled. Calculation of the obligation, as I told you, value of the duty saved into 6 times 6x, right? And validity for the import is 24 months, and actually user condition is allowed, and you have to export within a period of 6 years. Another important aspect is whenever you are importing, you have to take a certificate of installation, because machines are you are importing, and government wants to know whether those machines are installed in your factory or you are not installed. That proof they wanted. So therefore the chartered engineer certificate or any of the authorities are there, they will come and they will inspect, they will give the certificate. So the certificate of installation of capital goods is a very essential certificate. You have to get from the jurisdictional customs officials or chartered accountant, independent chartered accountant. These are been allowed. A certificate from the jurisdiction of the customs authority or the independent chartered engineer. So that certificate you can get from them. Okay. And that certificate you have to submit to the customs authorities. Shifting of the capital goods, suppose within your organization another unit is there, and then of course with intimation to the concerned authorities, you can make a shifting of the your capital goods. Otherwise capital goods are not allowed to make any shifting, or any means third parties you can't send to either sale or send on other means, you are not allowed. So therefore within your organization, for example, another unit is there, then it is allowed, otherwise it is not allowed for making the shifting. Indigenous sourcing also been allowed, as I already told. You can indigenously source it. That procurement is called is a deemed exports. And the deemed export refund you can get means first you have to pay the GST, and you can get the refund of the GST whatever you have paid. Of course, so whenever you are making this deemed export, there must be some evidence. Evidence in the sense that acknowledgement of the receipt from the jurisdictional officer that the items have been received in your factory. So that is what the proof is required. Incentive for the early fulfillment. For example, you are making the means exports within, for example, 75% of the or more of the specified obligation is fulfilled, then means obligation till the sorry, suppose you are made a fulfillment of 75% of the obligation within the any of the within the half or less than the half the period of the export obligation period, then that obligation is been reduced by 25%. Instead of say 100%, that obligation is been reduced to 75% if you are completed that obligation within the first block. For example, there's a half the period, if you can export, then this facility you can get. Then GST, as I already we have discussed, the GST whenever you are importing, that is been means exempted. And in the case of the deemed export, suppose you are taking the materials indigenously, then that obligation means that GST whatever you have paid will be refunded. These are the basic notifications. Then we are coming to the this sixth chapter, that is EOU. So all the chapters are available in this A. If you go to this, the policy, all the policy related as well as the procedures both are available. You can go to the chapter wise. Here the chapter wise, for example, like this policy chapter wise you can go. Now we are going to understand about the means EOU units. This is EOU unit or electronic hardware technology park, software technology parks, or biotechnology park. All these things comes under this chapter 6 scheme. Here this is to promote the exports. You are being allowed certain provisions under the customs bonded provision. This is the EOU is a bonded provision. These are being customs bonded. Okay, under the customs bonded, just a minute, the question is there under EPCG. What is your question, sir? Since she is not eligible to take the input tax credit, even though it is required. Now, who has made this question? Can I understand this question? What it is? Hello? 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 Who has made the question? I couldn't understand the question. What is written? Who has made the question can speak to me. Yes, sir. Whoever made the question can speak to me.
She's saying, I'm surrounded by gates and I can't escape.
Hello.
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 Hello. Hello. Not. Tell me, sir.
Hello.
Hello. Hello, Miss.
Hello, sir. Hello.
Hello. Tell me. Tell me. I'm
Yes, sir.
hearing lot of
Sir,
noise is coming from the background.
Yes, sir. Can you hear me?
Yeah. I'm hearing you.
Sir, see, how do I can ask every time I'm trying to ask some doubts, but in that unmute is not allowed me. Mute is not allowed me.
No, always I allowed you. Okay. Anyhow, now you can ask me.
Sir,
What is
one
your doubt?
question.
Yes, sir.
I have a advance authorization. I can use advance authorization and import the material.
Yeah.
And same time I can export the goods. In that
Yeah.
case, can I avail the road tab and DDB?
Yes, sir. Yes, sir. But there is certain conditions are applied. At present, of course, they are making certain objections, but the government is now taking the consideration of the ROTUP because ROTUP is an independent separate scheme. Even though you are an EOU unit or even your advance authorization or you are using the EPCG scheme, you are a holder of the EPC scheme and you are making export. As of now, of course, ROTUP when they're making the customs are making certain objections, but the government is coming up with the provisions to remove these objections because for that separate some rates they want to publish for EOU and SCZ and other things also they want to make certain provisions. But as of now, that provisions are not there, so customs authorities are been objecting.
Hey, see, this has been commenced in 21 January. Do you know,
Yes,
sir?
sir.
From
Yes,
that
sir. Yes.
onwards, it is when we have filed a shipping bill, it is saying you are not eligible for road tab, you are not eligible for like DDB. I say, shipping bill itself is saying that you are not eligible.
So that is what I'm talking, sir. As of now, for EOUs, suppose your EO unit, you're not entitled
I'm
for
not
ROTUP.
EOU, I'm a manufacturer
No,
export.
manufacturer exporter of the, for example, you are using the advance authorization or EPCG scheme, then also you are not being allowed as of now. For that, the government is already taken the cognizance of this provision that complaints also they're taken, and for that ROTUP separate rates they are going to announce. Separate rates they want to announce, then they will be allowed. Okay.
Okay, Abhi, it is under process with the government.
Yeah.
Likely to be when they're likely to be announced. Do you have any idea?
They have taken they formed a committee, but not yet come out with the committee reports.
So this is the same committee what earlier they have announced. Plesae committee, बोल के एक committee has appointed.
No, not that committee, but this is a separate committee they formed.
Thank
They
you,
now
sir. Thank you.
separate formed. Okay.
Sir, when I importing under
Yes, sir.
advance authorization scheme,
Yes, sir.
custom duty, IGST, cess also included, total, right? When I am
Yeah.
to discharge my export obligation, is it
Yeah.
I am not eligible to take cess since it is other than only automobile company eligible to to take just where they are going to discharge output level. Then I don't have any output. For that also it is application to me.
Again you repeat it. Again you repeat, sir.
During importing time, I need to take the exemption for basic custom duty, IGST, cess also, right? When I am
Yes,
discharging the export application, all duty included 6 times, right? 6 times above, right? Within the 6 times, is it including cess also?
If it is an applicable cess is only for only certain items. The capital goods, I have doubt certain items are not allowed, because these are only for the means automobiles and certain luxury items which are demerit items. They call it not luxury but demerit items, like some hazardous to the health and all things. For that only this compensation cess is allowed. So not for all the items. For the most of the machineries, this compensation cess is not there applicable. Only for those automobile related certain items only applicable. Otherwise, is not applicable to all others. Okay.
Is it
Sir, I
included
have one
application?
Yes, sir.
Application to export value.
Value I told now 6 times, and advance authorization it is 6 times the duty saved. Suppose you have made that duty, there are different types of duties are there. I told you, one is the basic customs duty, the other one is IGST, and others also. In case to case, some other duties are applicable, like anti-dumping duty. Not in all the cases, but only few notified cases only that anti-dumping duty is allowed. So like this, whenever such duties are there, so those things are also exempted under the advance authorization, also under the EPCG scheme. Suppose under the EPCG scheme, you don't want to take certain taxes that means exemption, like IGST exemption you don't want, then you can take this means payment of the IGST. For to that extent, that obligation can be reduced, because you have paid the IGST. Now what are the you have saved? Only the GST portion you have saved, the basic customs duty portion you have saved. To that extent, up to 6 times you can take the obligation. Okay, sir.
Okay, sir. Thank you. One more is, sir, digital signature class 1, class 2, class 3 is there. Can you brief about three types?
Class 2 only had to allowed, sir. As I shown you in the means this chapter 1 in DGFT is the foreign trade policy. They very clearly mentioned about the class 2. Class 2 is very comprehensive for all the incentives and all things you can take, for the refunds and also for the GST or income tax, everything you can use that class 2. Okay.
Could you please explain the class 1 and class 3? What is the difference between the 3 types?
Those things I'm not into that one, sir. So I'm not justifying to explain. But what they mentioned very clearly in the scheme is, what they mentioned very clearly there is in the policy is class 2 is required.
Okay, sir. Thank you.
Okay. And lot of scheme also, some publications are there in Tax Guru, my own publications. I will share to you.
Can you share it to me also, sir?
Yeah, I will share all the things to all of you, not only specifically 1 or 2, but all of you. I will share it. There I mentioned also about the ROTOP scheme is not allowed for certain things. These are the suggestions like they mentioned. Putting into this, the ROTOP scheme is not allowed for the advance authorization. You see, advance authorization, EOU, jobbing, SCZ, these are not allowed. Very clearly in this scheme is there. These are not allowed.
Yes, there is a circular. Yes.
Yeah, that is what I made this recommendation, suggestion under this issue. There's an issue because these are the ROTOP scheme is a separate scheme. Only those which are been not remitted, that taxes and duties which have been suffered, but nowhere it has been remitted, are refunded to us. Therefore, these are mutually exclusive scheme. So therefore, it should be allowed. But government is not taking the decision. Many representations are made through various chambers of commerce and many forums. We have made the representations, and this is what my article also published in the Tax Guru. there I have made a suggestion very clearly. Issue 2, you see, in the issue 2, advance authorization, EOU, jobbing, SEZ, these things are not allowed, which is I call is illogical. Okay. So okay, till that government decision takes, we can't help, because as per the government regulations only we have to move. So that is how things are.
Sir, one more question. See,
yes, sir.
I avail this advance authorization, but if I have not fulfilled that EODC, export obligation discharge certificate in the time limit.
Yes. Yes, sir.
So what will happen? What is the consequences?
Yeah, consequences, all these consequences I told you, the obligation which is the shortfall, to that extent you have to pay the duties along with interest. Interest at present, the customs interest is 15% at present.
Okay.
So you have to pay the interest also on the duty what you are suit. That is a proportionate
Only,
basis.
say for example, sir, 1 minute. I have taken a for 1,000 tons per day. I can export almost with value addition as a obligation, but the BRC is not realized because of maybe some other issues in the bank and all. In time, I cannot obligate that. So in such case, how I can address? Because of bank and all, because the bank people are not issued the BRCs. Even we have received the remittances in time. In such case, how do I can address?
No, bankers are not issuing. How you can sell nowadays? Bankers have an obligation, as and when they have got the realization, they have to make this in online. Bankers has an obligation to submit the online. In case they're not submitted, you make a representative to the bank to make the online submission of that BRC. So that will be available in DGFT website. You can download and you can submit to whoever wants. Okay. So nowadays it is everything is online, and bankers, you are telling they're not giving the EBRC. EBRC, they will not give you any hard copies. That hard copy submissions are stopped.
Hard copy, it will be available
only
in
online.
Title.
Only online provisions are then they made. Okay, sir. Only online provisions. And there is a one of the relation of the export proceeds. You see, whenever you are made in export, within a period of 9 months, that export realization must be there within 9 months. You see very clearly it is 9 months. Within 9 months. As per the FEMA regulation, this is FEMA circular now. This is the FEMA circular, the bottom. Yeah, the notification I shown in FEMA. This is the latest one, is updated on September 10th to 2021. This is the latest one. As per this 9 months is a obligation, means suppose you have to get the relation within 9 months, you have to get. If you not got, then penal provisions will be applicable. Then also, whatever the you are made in export and other thing, for example, you make the duty drawback. That duty drawback will be withdrawn. Then you have to pay back that whatever you got, that duty drawback, you have to pay back to the government. Similarly, where what are the other incentives like refunds you have taken? For example, yesterday we have discussed that ITC refund or IGST refund, you got it. Those also you have to refund it. You have to make a repayment to the government. Okay. So those are there. This is concisely what we are talking about here is, for example, here we see, just a minute, yeah. This whenever you are making the export under LUT, then export has to be made within 3 months from the date of invoice. Once you made the invoice under the LUT, within 3 months you have to export. If you are not exported, then LUT is not valid. They can withdraw that LUT provisions also. Okay. And suppose in the case of the services, that is for the goods, services, the service payment realization is made a condition. If the realization is not made within 1 year, then this export facility will be withdrawn. LUT facility will be withdrawn. In advance authorization, the import validity is 12 months and export obligation is 18 months. If you not made 18 months, then proportionately what are the shortfall, based on that the customs duty has to be, what are the duties you have not paid, To that extent, all the duties you have to pay. Suppose the anti-dumping duty also applicable. For example, I'm talking about anti-dumping duty also. You are saved. You are not paid at the time of import. You are not fulfilled the obligation. Therefore, what are the you are saved the duties proportionate to that shortfall. You have to make the duty payment along with interest. Along with interest. Of interest is at present 15%. Then again, EPCG license. EPCG license valid for the import is 18 months from the date of the issue of the such license, and obligation is 6 times the duty saved over a period of 6 years. Again, here also the same condition applicable. If you're not able to fulfill within this period, then the proportionate basis, what are the non-fulfillment, to that extent that duties has to be paid and also interest has to be paid. Again, here one more common provision I'm talking either for the advance authorization or EPCG also, that regional authorities, that is RA generally we call that the DGFT offices of your concerned jurisdiction, that regional authorities they call it RA. RA has the authority to extend the obligation. They can extend the obligation subject to certain payments. Some payments, that penalty means that the fee has to be paid, then they can extend that obligations. Okay. In case of advance license, 6 months they can extend, and in case of EPCG, up to maybe maximum like 1 year they can extend. So these extensions also you can get it. In case of merchant exports, of course, tomorrow we are going to discuss about the merchant export when I'm coming to with documentation, etc. Then merchant exports, because they are not the manufacturer exporters, they are the procuring from the market as a trader and then exporting. If they are getting the material at the 0.1% rate of the GST, for example, then they have to export within 90 days of the purchase invoice. Within 90 days of the purchase invoice, they have to export. That is an obligation. Okay. Clear, sir? The export realization has to be made within 9 months. Suppose you are making the export from the warehoused goods. Suppose you are sending for the warehousing in overseas outside the India. Suppose you have a warehouse in Dubai. You are sent to your warehouse. Then from the warehouse, within 15 months, that payment has to be realized. Okay. So these are the RBI provisions. So good. We are talking about the EOU scheme, no? Just a minute, I'm coming. TMA. Yeah, EOU I'm talking about. EOU is specially customs bonded provisions under the section 65 of the Customs Act. They have been made. There's an obligation they has to take. There's all the imports are allowed duty free. All the imports are being allowed duty free without payment of the BCD, SAD, also IGST and competition cess also been exempted. So that is for the import. Then export, all means it is actually originally it was 100% EOU. Means 100% of the items has to be exported except certain 5% like that you can allow to make the domestic sale, and also waste is also allowed, certain times are there. But later what happened, many people are not able to do that up to 95%, like for example export, because 100% export except that 5% domestic sale, that's not able to do. Then domestic sales have been increased to 5% to 10%, then 15%, then 25%, like they increased. Even then they're not able to do it. Then what they take, they remove that 100% provision. Now they're talking export oriented units. This is not 100% exported, but export oriented units. Okay. And export oriented, they're supposed to export majority of that items that they export. So whenever they're exporting, of course they're imported the duty free, then they can export. Suppose they're not able to export and some part of this they want to sell in the domestic market, then applicable duties are there. What are those? I will tell you. Then import, for example, import is under the GST. The BGST is a BCD, sorry, the basic customs duty is exempted. Then IGST is also exempted. Compensation says if any, not in all, but if any is there, that is also exempted. Okay. And they are all also allowed to take from the indigenous. Domestic sourcing also allowed. Suppose the domestic this DTA, they call the domestic tariff area, the suppliers, they can supply to that EOUs, then it is called as a deemed exports. So this is called as a deemed export. In the deemed export, first you have to pay the GST and then claim the refund. Then for the EOU, because EOU is always customs bonded, lot of procedure oriented formalities are there. These are the some of the procedure oriented formalities. Just I'll tell you. Suppose you are a EOU, you want to procure from the domestic sourcing. So you have to first send a prescribed form. That form A is there. That intimation has to, prior intimation has to make to the DTA for your intention to buy. What are the items you want to buy and other thing. That intimation also you have to provide to the jurisdictional customs, the GST officials. That copy has to be sent. Okay. Both the officials of the supplier and also to the your jurisdiction official. Both the officials you have to make the intimation. That is under form A. Then the supplier is making the supply of the goods, and there he charges the GST. GST is applicable. There is no exemption, but applicable GST has to be applied. But refund is allowed after making the payment. Okay. Then a copy of the invoice has to be sent. Again, endorse that invoice, that endorsement of the invoice you have to send to the DTA and also to the jurisdiction officials. Then also the EOU has to maintain the records in form B. In a register they have to maintain. In the register form B, they has to send means digitally now through jurisdictional official of the GST officials. So much formalities are there in EOU, but not much of the benefits. That is why people are not preferring the EOU. EOU is olden days, it is there some years, 10-15 years, is a good scheme, but now no more it is an advantage. People are coming out of the EOU because lot of formalities, lot of procedures you have to follow, because everything is customs bonded. In the customs purview, it is all been done. So therefore it is very difficult to operate under the EOU. Various documentation formalities you have to comply with. Along with that formalities, of course, every cost also involved. So therefore this scheme is not so good. People are coming out of the scheme. First you have to pay the GST. Then GST is one thing I'll tell you. For example, here you are procuring from the domestic. Suppose you are both the supplier and the yourself, means your recipient, both are in the same state. Then CGST or SGST can be made. That is the intrastate transaction. Interstate means there are two are in different states, then IGST can be made. Okay. What are the IGST are made, that you can take the ITC, that means EOU unit also allowed to take the ITC. If they don't want to take ITC, they can take the refunds also, that is allowed. But ITC is also allowed. ITC you can take, and whenever you are making the domestic sales, there you can utilize the ITC, this one. Okay. Otherwise, if you don't want, you can get the refund. In the refund, there is two provisions are there. The supplier can get the refund, or the EOU can get the refund. If the supplier get the refund, he has to get the no claim certificate from the EOU. On the other hand, if the EOU is getting the refund, then he has to get the no claim certificate from the DTA supplier. So means ultimately is only one person can get the refund. Either the supplier or the EOU unit can get the refund. Okay. Okay. And some of the important aspects, some people may be confused. Whenever you are making the supplies, the DTA making the supplies to EOU, it is not a zero rated. It is not a zero rated. Therefore, you can't use the LUT and you can't make without payment of the GST. Whatever the transaction happens, you have to make the payment of the GST only. The supplies from the DTA to EOU are treated as deemed exports. When it is a deemed exports, first you have to make the GST payment, then claim the refund. The GST refund, whatever you have made, that can be paid. And of course, for that there should be evidence that transaction happened. That is what the Form A has to be sent to the supplier, and after the supplier making the invoice, that invoice endorsement has to be made and sent to that as an acknowledgement of the receipt of the materials. So these formalities has to follow, then EOI, that fulfillment of the deemed export provisions can be fulfilled. Okay. Okay. These are some of the notifications related to that EOU. Then coming to the seventh chapter. Seventh chapter is about the deemed exports. Deemed exports is basically the goods are not leaving the India. Goods are not leaving India, that country it is not leaving, but within the India only that goods are being supplied, and payments are received either in Indian currency or it can be a foreign exchange. Both options are allowed, either Indian currency or foreign exchange. Goods must be manufactured in India. That is another condition. Not just you are importing from China and then supplying, talking this is a deemed export. No. And whom means that is what, as per the GST law, of course, deemed exports has a separate meaning. And as per the notification, what is that deemed export, that I will tell you. In the foreign trade policy, as per the para 7.1 of the foreign trade policy, this is the deemed export meaning of this, and there are a lot of items covers under the deemed exports. Even the supplies to the means contract. Hello. Suppose you are making a supply to a contractor who is a overseas bidding, for example, means so some contracts are raised for the overseas contracts are there, for example. For that also, this EOU means suppose supplies to a contract against international bidding, supplies against international biddings also called as a deemed exports. Hello, please mute, sir. It is disturbing. Whenever you want to discuss, you can discuss. Otherwise, please mute. So whenever you are making the supplies against international competitive biddings, then that is also treated as a deemed exports as per the foreign trade policy. But as per the GST, they mentioned only these four provisions are treated as a deemed export. Supplies to advance authorization holder, supplies to advance authorization holder, supplies to EPCG authorization holder, or EOU or EOU family, we call it EHTP, STP, BTP units, or if you are making the supply of the gold by the bank or the public sector undertakings, then these four provisions comes under the deemed export definition. So supplies under these four are called as a deemed export. But supplies, for example, international bidding and other thing is not treated as a deemed exports. But in foreign trade policy, it is treated as deemed exports. Okay. Whenever we are talking about the GST and GST payment and its related refunds, we have to consider only these four provisions only. If you are making supplies to these four, then these are being treated as a deemed exports. Then first you have to pay the GST, then you can claim the GST refund. Refund is allowed, either the supplier or the recipient. Either of one, only one is allowed to get the refund, either the supplier or the recipient. So that is about the EOU scheme. And of course, EOU scheme, other formalities are there. Procedure part, that procedure part against chapter 7 of the handbook of procedures, you can go through it. Lot of procedures are there for the getting the license, means that EOU registration, and time to time submission of the documents and reports and all things. Various provisions are there, so those you can refer there. Then I'm coming to the another beneficial. Yes, sir. Yes, sir.
Deemed export. One in
Yes.
under GST, the person receiving person is located in US or Germany, billing from India, and ship to is again in India only. Bill to Germany, ship to India, supplier in located India. Then this is called also is a deemed export, right?
No, it's not actual deemed export. Deemed exports are goods are not leaving the India and
Not leaving
manufactured in
India.
India. No, listen, sir. Listen. Here, these the 4 supplies must be there. If you are supplying to advance authorization holder, or you are supplying to the EPCC license holder, or you are supplying to EOU, like that only these 4 supplies only treated as a deemed exports. You may be means called from somewhere, you have asked to somebody third party, that is the means actual buyer may be different country, and you are asking to somebody else third party to deliver to some other party. So those may be transactions are different transactions, but not deemed export. Deemed export only when you are making the supplies to these 4 categories. If these 4 categories applies only as per the this GST are called as a deemed exports. Okay, and there is a special notification also there. This is the notification. Whenever I'm mentioning, always I mention about the notifications and relevant that sections are the paragraphs of the foreign trade policy or the procedures I used to mention. So this is the notification. Under this, these are the deemed export definition. So you first pay the GST, then you can claim the refund under this notification. Okay. Now come to the transport and marketing assistance. This is another scheme. This is they called as a chapter 7A. Earlier the only 7 chapters is there, 7 and 8, 9 chapters are there. In between they are inserted this new chapter called 7A. Okay, this is to make the encouragement of the mainly the agriculture related certain items which are suffering lot of logistic related issues and problems. Therefore, our agriculture products are not becoming competitive. To make this competitive, because of the logistic related disadvantages are there, some type of cost reimbursement they are making through this scheme. Of course, this scheme is also not WTO compatible. This scheme may not continue for long, but it is at present it is available. They introduced this scheme, and for the agriculture products, as I told you, under this scheme, what happened? Just I'll tell you. Under this scheme, the coverage, as I told you, all the exports and duly registered with the relevant export promotion council. This is very important. Means that all the exports are allowed. Means that mainly agriculture. I told you that items are also mentioned in the appendix. So only those appendix items only it is allowed. Okay, and RCMC is required. Means concerned RCMC you have to register with. That is a mandatory requirement for the export of eligible agricultural products to the premises of the countries as per the appendix 2, annexer 2. That countries also they mentioned. What are those countries? What are those things? Also, I will explain to you with complete details. The applicability applicable for the exports effective from 1st March 2019 up to this, but now it is an extended sometime. So now that is available. So eligibility for the products also they mentioned chapter 1 to 24, and again they are given a list of the items and what are the rate also they mentioned. Pattern is direct cash through direct bank transfers. Once you are making exports, that is shipping will have to declare, and it is automatically coming to your bank account. Okay, so that is what the direct bank transfer provision. Export by air as well by sea, both are been allowed, but LCL cargoes are not allowed. Only full container loads are being allowed. Full container load, either 20 feet or 40 feet containers loads, those have been allowed, but not LCL cargoes. A container having both eligible and ineligible category of the cargo, that is also been mentioned. Export by air also been allowed based on the tonnage of this air freights and all things they're allowed. And the export from the SCZ, EOU and all things not allowed. This scheme, TMA scheme, is not applicable for these products exported from these units are not allowed. Okay, and also deemed exports also not allowed. Only direct export to certain destination countries as specified, those only allowed. Okay, online application you can make for this A and ENF 7AA, that application along with application fee and all thing you have to mention. Document submission, all these are there in the procedures. You can refer to the handbook of procedure. This you want to explain to you. The list of agricultural products not eligible under TMA. All the export means 1 to 24 chapter we have told you, but all the 24 the chapters 1 to 24 is not eligible. Some of them is eligible, some are not eligible. What is not eligible are very clearly mentioned. These are the not eligible products. Not eligible products. Other than this, other products are under the chapters are allowed. Under the chapter, other than this, those items are been allowed under TMA scheme. Then they made a region wise. This is the region Western Africa, means certain destination countries only they allowed this scheme, not to the all other countries. Only these specified countries only they mentioned. There is an annex 2 of their notification. They made Western Africa, these are the countries, and EU, these are the countries. Like that they mentioned these countries destinations only you are entitled for the TMA benefit. And the rates are like this. As per the zones I told you, regions, these are the various regions. And if suppose you are exported under say a 20 feet container, this is 20 feet equivalent unit. These are 20 feet equivalent unit. Based on this, they are giving the this much of the rate, this much of the cash refund. Like this is cash refund. Okay, one container, suppose you are exported to West Africa, then you will get 11,200 rupees. You will get, this is rupees. And suppose EU, European Union, you are exporting, then 9,800 you will get. Like that, this is per unit. This is for the sea consignments. These full load containers. LCL cargoes are not allowed. Only full load containers they are allowed. These are the rates of the year. Okay. And refrigerated containers, for example, these are the normal containers. Refrigerated containers, for example, some food items required to preserve in a certain temperature conditions. Then you have to maintain certain cooling conditions, for example, at say 10% of the 10 degrees centigrade or 5 degrees centigrade, like that you have to maintain. So therefore, the refrigerated containers you have to use. In such case, these are the rates. By year per ton basis, these are the rates. By year per ton basis, these are the rates. So these are the amount you are getting as a refund, cash refund, when you are making the export of these items. Okay, sir. Clear? And also I told you these are not applicable to all type of exports, only agriculture related exports, chapter 1 to 24. Again, what are not allowed also they very clearly mentioned in annex 2. So only those which are allowed, those you are entitled for this. These are the refunds you can get. Now we are coming to the duty drawback. Duty drawback, again under the chapter 4 of the foreign trade policy, they made duty exemption scheme and duty remission scheme. And this is a duty remission scheme. Okay, means first you have suffered the duties or taxes, and those things will be refunded to you. That is what the meaning of the duty drawback. Duty drawback, as I told you, this foreign trade policy in the chapter 4. This is the duty exemption and this is duty remission. Under the duty exemption, there is the advance authorization and the DFIA. And this under this, there is a duty drawback is allowed. Okay, and the duty drawback, again, when it's a duty drawback, it is administered by the customs authorities. This is being administered by the customs authorities, and therefore the Customs Act is applicable. Under the Customs Act 1962, the section 74, this is for the re-export of the imported goods. Re-export of the imported goods means, suppose you are imported, you have suffered certain duties, then you found certain defects or something, what are the reasons, you want to send it back to again to your supplier or some other countries or whatever may be. So in such case, what are the duties you have paid, based on certain percentage and other thing I will explain to you, you can get the drawback, the refund means remission, you can get it, that remission you can get, and that is under section 74. Then second section 75 is about the manufacture of the goods you are exporting. Suppose you are using certain indigenous or imported goods, whatever may be, but there you have suffered already certain taxes and duties, and then you are manufacturing and exporting to outside the country, then you are entitled for certain duty drawback as per the certain rates are prescribed by the customs authority. Every year they are used to publish. Okay, as per the publication, the rates are there. Based on that, you can get the means your means this remission. Okay, means automatically once you are exporting and you are declaring in export shipping bill, then automatically without any further applications you will get within the 90 days this refund. Means this is remission, actually not refund, we call it a remission. Okay, remission of the customs duties which you are suffering, like. Okay, and the section 76, this is a provision in duty drawback provisions, and these things, what are this duty drawback is not allowed and nothing they calls about. So basically 74 and 75 we are talking about. In the 74, if you're talking about, as I told you, you are imported certain goods, and those goods again in the same form, in the same condition, you are again sending back to the some supplier or somebody else. In such case, you can get maximum of 98% of the drawback you can get under the 74. Okay, here re-export must be done within 2 years. Conditions are there. Within 2 years you have to make the means export, and the 2 years from when declared from the warehouse after the paying the duties, either 2 years from your customs clearance, or when you're cleared from the warehouse, that 2 years is applicable. Maximum is allowed 98%, and 2% deducted is towards the administrative charges. Okay, customs also for this processing and all thing, they incur certain costs, therefore 2% deducted. So maximum is 98%, but not all the cases 98% you'll get. How you get the percentage wise, I'll show you. This is the why. 98%, if you're not taken the goods to your premises, means it's not taken from the customs clearance and then you're taking to the domestic usage, then the 98% is not applicable. 98% when it's applicable at the customs premises itself. For example, you're not taken for the use, it is not put into use, means you're not cleared from the customs. There itself you have identified certain defects, for example, you want to re-export. In such case, this provision is applicable, 98% you can claim. But suppose you are taken for the use and within 3 months you want to send, within the not more than 3 months, you see, within 3 months, then that rate will be 95%. So within more than 3 months but less than 6 months, then 85%. But more than 6 months but less than 9 months, then 75%. More than 9 months but less than 12 months, 70%. Then more than 12 months but less than 15 months, then 65%. More than the 3 months but not more than 18 months, then it is 60%. Then after, there is no such provision. Means maximum it is 18 months is they provided. Okay, so this is how the provision. Proportionate rates also they're given, the drawback rates like this, you can get it. These only for imported goods you want to re-export, for what are the reasons, for the repairs or for the what are the reasons you want to are sending back because it's not correct right materials are sent, something wrong materials are received, for example, you want to send it back. So in such case you can get these drawbacks. Then we are coming about the drawback in case of the manufactured goods. Okay, under this section 75. Under the section 75, of course, here that the definition or the drawback definition also given under this notification, customs notification. Drawback in relation to any goods manufactured in India. This is manufactured goods. Section 75 under that it's coming. Okay, and exported means the rebate of the duty excluding the integrated tax liability under the subsection of the section so and so, and compensations means what is the drawback? Drawback means effectively you can consider as a basic customs duty, but it is not including IGST and compensation cess. Okay, the drawback definition, these are not included. This IGST and the compensation cess is not included. Okay, that is what the definition. Then under the section 75, time to time, every year, of course, the government used to publish all industry rate, AIR, under rule 3 they used to publish every year. They updates what are the latest incidences of the taxes, duties and values. Based on that they calculate on all India basis all average of the industry. So they publishes all industry rates. All industry rates also I will show you in the customs provision. For example, you go to the customs act. I'm closing this one. Custom is CBSC, that is you can call it CBSC, CBIC. So this is what this CBIC. If you go, both the customs and this GST and other things are available. When you go to the customs here, this is the customs. Okay, and in the customs, the act, rules, notifications, all these things are there. Tariffs, manuals, all these things are provided here. Okay, under the manual case laws, just yeah, this is the duty drawback schedule. Okay, and here you can this notification, this is the latest one, you can download it. Amendments to the amendments also they made. Okay, this how the both the Hindi version and the English versions are there. The schedule will go, just a minute. In the duty drawback, the duty calculator, custom duty calculator.
Hey, this is the English version, sir. Just you can see the.
Yeah. English version is there, but the rates I'm talking about, this is only notification they're given. The rates has to be seen. That this is the English version, it's okay, but the rates I'm now going to look into. This is only the 2 pages one. There's a schedule is there, the rate schedule. Based on the rates we are entitled to take the.
You can see in the 1920, sir. Some schedule will be there in 1920. Can you see in 1920?
No, 1920. Why you will go back? We have to go
then
to the
sir,
latest
schedule they'll not give every time. They'll give it in file. They'll make some amendments here and here.
No. You're wrong. Every year they publishes. So the latest is there. It must be available here. But I'm looking at all India rates. Just a minute. Let us see this one. And this is only amendment they're given. Okay, I will show you that rates are available. Where it is there, I will look into and I will share to you. So otherwise tomorrow I will show you. But the rates are been available, and you can based on that rates you are entitled. Okay. So this is all India rate. AIR rates have been published every year, and accordingly you can take. This is the one is the previous one, not the latest. I'll click here and come forward just a minute. Yeah, this is what the rates are there. A sample like I'm showing to you. Here you see these are the different items chapter wise as per the HSN code. This is broadly in a 4-digit level. They made the HSN code wise. This is the description of the export item, and this is the drawback rate, and this is the cap, maximum cap, if anything is there. So some of the items not available. Some of the items you see here, for example, the fresh fish and other things. For example, the chilled form, you can get 2.9%. Okay, duty drawback of FOB value of exports. Okay, like that, different rates are there. These are the different rates you see. Suppose there's some items, the fruits are there, for example, other than headings top A, then they get 1.15%. These fruits and all thing, right? And similarly, many items are there. You can see here. Some are there made up to 6 digit in details. If you wanted, they meant into the 6 digits. Otherwise, broadly, if it's available at 4-digit level. Okay, some of them these things you see 4-digit level, and some are there further they're divided. For the rice, for example, packed in plastic bags, and more detailings are given. So it is went into 6 digits. So here you can get the per ton 7.5 per ton basis. Like that, they're given the rates. Some of the FOB value wise, some are there on tonnage basis wise. Okay, FOB value means ad valorem, like values, right? Percentage of the FOB value. Some are per unit wise, this per ton, per kg, per packet, like that. Okay, so this is how they publish very yearly. Then brand rate also allowed. Suppose you are not satisfied, the rate which are given, for example, the rice, for example, you are talking about this particular category, you are getting 7.5, I mean 7 rupees 50 paisa you are getting, you're not satisfied, then you can submit for this brand rate. Applies in specific cases where year rate is not available against the specific application, or less. If the less also you can apply for the, for example, less than 80% of your what you supposed to get it, but your that rate is less than 80%, then also you can find for the special brand rate application you can make. Okay, so this is how the this duty drawback. And realization proceeds, as I already told you, that is a very important consideration you have to think. Broadly, these are the timelines. These are the timelines. The export, whenever you are making, the export realization must be within 9 months. That is a general thumb rule, both for the export of goods as well as for services. And in case you are exporting the goods from the warehouse outside our country, in such case, it is 15 months. So you have to get the relation. Otherwise, as per the FEMA regulations, the actions will be taken. There's one session we are talking about the FEMA related, all the regulations also we are discussing about, important to import and export. All the entire FEMA regulations we are not talking about. only relevant to the import and export related fields we are discussing in one of the session. Okay. So otherwise, this is the notification of the FEMA notification, the current one, that is September 2021. That is an updated. So they talks about this provision 15, that's 9 months, and 15 months in case of the warehouse. Even though you are exporting from the SCZ or EOU or EHTP or STP or BTP, in such cases also similar like provisions are applicable. Okay. And of course, the authorized dealers means the bank has certain authorities within a broad limits. They can extend subject to certain conditions. Those conditions means they are satisfied, something prevented you. For example, the corona period, the RBI itself is as a general notification they made it to increase it to 15 months. From 9 months to they increased to 15 months. That is during the corona period. But again, corona is gone, then they normalized again to 9 months. Okay. So this is how the today's session. Tomorrow, because now we are briefly understood about the policy procedures, CASA means the foreign trade policy and foreign trade policy procedures. Then also last time we have discussed about the GST related, and before that in customs related provisions also we have discussed. Customs mainly we have discussed about the assessments, customs assessable value, how you can arrive at transaction value, and other things also we have discussed, and what are the different type of duties we have discussed, and how to calculate the duties also we have discussed. Then GST provisions we have discussed, this foreign trade policy procedures we have discussed. Now we are going to practical tomorrow, like documentation, how to make the documentation, what are the various documents are required for the export as well as for the import, what are the different procedures for the making the exports movement. Okay. So today with this I'm closing the session. If you have any doubts and other thing, let us discuss. Otherwise, tomorrow again we'll meet. Yes, sir. Any doubts?
Sir, customs calculation with examples, yes, can you explain?
Yes, sir. Tomorrow is there, na, sir. Tomorrow definitely will explain. When you are making the documentation, there I will show you. In fact, I shown to you also some other exercises in India Trade Portal, how to get all these things I mentioned here. What are the duties applicable for import, and in case of export also, what are the incentives and all things are applicable, I shown to you. Tomorrow again I will show you. Also in IceGate, how to calculate the customs duties, I can show you. Okay.
Okay, sir. Thank you.
Okay, sir. Thank you, sir. So with this, I'm now closing this session.